One of the questions I get a lot these days is how the American presidential election is going to impact the stock market. So when I speak to potential clients or somebody who needs my services, one of the questions I most certainly will get during our conversation is how is the upcoming election in November going to impact the stock market? So this is what we're going to talk about today. You're listening to Investing Mastermind podcast. My name is Hina Lundholt.
And I'm Michelle Markey.
So, Michelle, this question that I get from so many people these days, how is the stock market going to be impacted by the presidential election that's coming up this November in the United States? We have Kamala Harris and Donald Trump. And how are whoever is going to be elected, we know nothing about that. But how is the stock market impacted by an election? Do you know the answer to that question?
From what I've heard before, the stock market's not really affected too much by whoever wins the election. So that's the main gist of it, is like it doesn't really matter who is in office. The stock market is mainly driven by other factors. Like you might see a brief reaction in the stock market maybe following the election itself, like on the day after, but it's not a long-term effect of whoever gets elected.
Yeah, and what some of the trends has been showing is that, yeah, it's optimistic. The stock market is usually very optimistic in an election year. So people are optimistic about the new future or whatever it is that actually drives the fear and greed of the stock market. But usually when it's election year, there's actually a lot of optimism. And just like you said, whoever is going to win, does the stock market do better when it's a Republican or when it's a Democrat? And a lot of studies has actually been conducted on that topic, but there's just never been a clear answer to to that because there are so many other things that actually drive the stock market rather than if it's a Republican or a Democrat. So what those studies showed is that the stock market has been going up. The historic trend of the stock market is that the stock have increased year on year. It has only been going up. And that, yeah, there's been several presidents and sometimes there's a economic cycle where the stock market does better. So it's not necessarily who is president or which party is leading at the time that actually decides or determines why stocks are going up or down. So regardless of who it is that's going to win in November, that might actually not impact the stock market at all. There are some beliefs that, for example, the Democrats, the taxes are higher, whereas the Republicans, as a Republican government, they're more associated with policies that favor lower taxes. So, there's people think right now, ooh, if it is a Republican, then they're going to lower the taxes. That's great for the stock market. The Democrats have already said that they are going to actually increase the capital gains taxes. So something that impacts investors. So that could also play into what people would think is going to happen in November.
Yeah, I mean, sure, there are some of those overall macroeconomic trends that could be at play, and it'll be interesting to see how some of the promises the candidates make, how those may or may not play out. Like, not all of the campaign promises become true in reality, and either way, the economy is still probably going to feel the effect of federal debt going up. Like, federal debt compared to World War II is even higher than comparatively what it was in the 40s. And that's somewhat concerning. So, ever since the pandemic, that caused the federal debt as a share of GDP to skyrocket. And both candidates aren't really talking about how some of the past administrations in the last couple of terms have produced growing deficits. And the Wall Street Journal has said that neither candidate is likely to reverse that trend. So, based on how federal debt's going up, that can't be good for the future of America, because maybe there are some countries that don't want to buy America's sovereign debt in the form of US Treasury bonds, because maybe the US could default someday, Maybe we can't make good on our IOUs to other countries that have bought American debt. And that's a bit of a concern for the future. Whoever is president, that will be a problem that they could either make it better or they could make it worse. And then it will be a problem for the next president after that. And will that person keep kicking the can down the road, or will they actually do something about it so that we as a country don't just keep printing money to infinity and then have the potential of ending up like some of the countries that were stricken by just inflation and the ever devolving value of money, like in Argentina or Zimbabwe, wherever the currency eventually becomes worthless. So we don't want that for the American dollar as the reserve currency of the world that a lot of people still pay in dollars. So that's part of why the federal debt is a big concern. But unfortunately, for the well-being of the economy, the president, next one in, is not probably going to do much about the debt. But are they going to make the economy better overall? It depends. It depends if they invest in some of the areas like infrastructure that could give more Americans jobs. So they could potentially make more federal dollars available to necessary areas of the economy that we need improvement, like in infrastructure and also other areas like in energy, or there are other major areas that the government could influence as far as giving jobs to people. And we'll see if the economy gets better, but the stock market in and of itself probably won't be too affected unless somehow either president were to influence the Federal Reserve to lower rates even faster or more aggressively to then make the stock market go crazy. So if we were to go back to zero interest rates somehow during either candidate's term in office, that could cause the stock market to keep going higher and higher, which could long term be really bad because the higher it goes, the bigger it crashes. So that could be something of a warning if they were to try to influence the Fed to do things that might not be good for the economy overall. So if we're due for a recession or a stock market crash, that's probably inevitable. It's probably not the fault of either candidate, whoever is in office, if that were to occur. That's just part of the economic cycle that it could happen regardless of who's in the presidential office.
Yeah, and I want to pick up on a few things you said there, Michelle, because you talked a little bit about the World War. And actually, a study from JP Morgan has shown that since 1945, the stock market has actually done better under democratic leadership. So, again, it's not necessarily anything to do necessarily that a certain party was responsible at the time, but it could just be the general economy. And you also talked a little bit about that. The political parties can, of course, impact the economy. However, one of the things I'm actually seeing a lot on social media, so this is not necessarily clients that's been talking about this, but some comments I've seen a lot recently on social media about how people feel that life has become more expensive under the Biden administration. And so they're saying that they are going to vote for Trump so that they can feel that prices has gone up, groceries, gas, housing, things like that. But it's just really critical to understand what drives up prices and that it's actually a global phenomenon. It's not limited to the United States. It's not just happening in the US under Biden's administration, is happening all over the world. So in the European Union, we've also seen inflation. They've seen it in Asia as well. So if it was US policy or the Democratic Party, we wouldn't have seen it in Europe or in Asia. It would have been isolated to the US, but it's simply what has happened is that right after the COVID pandemic, the global supply chains was disrupted. So partly because of COVID in China and a black swan event happening in the Suez Canal. So what happened in the aftermath of COVID drove inflation. And we could feel it in Europe. And we've also been seeing grocery prices, gas prices after that. The war in Ukraine increased energy prices here. So there was just a whole lot of things happening in the world that actually caused inflation to increase. So if the American consumer feels it, just know that we also feel it in the United States. And it has absolutely nothing to do with Biden. He had nothing to do with it. It's simply, and Trump didn't have anything to do with it either. During his presidency, you could say, well, he was there before, so he's the one that actually did certain things. Well, it was actually something that happened on a global level. So when people write on social media that things were cheaper under Trump, well, they're forgetting that the whole world economy is interconnected. So no president and no matter who they are can control global supply chains and what actually happened, or the what happened in Ukraine with the energy market that actually happened after. So I just wanted to say that. And I know it can be very, very difficult to understand, but especially when you're sitting there and feeling that you can barely afford anything and you could be upset and you could look towards the president and say, it's your fault. Just remember that the current administration had absolutely nothing to do with what's happening.
Yeah, and I mean, they might not have led to inflation in as a result of supply chain problems, but they could have contributed to inflation in other respects, like both administrations before they had increased fiscal spending by giving stimulus checks to everybody who was under a certain income threshold. So if you got a stimulus check, that increased the debt. And both of the last two administrations have increased the federal debt. So you could actually blame both. Both of them could be at fault if you really are going to go there in their own way by doing more fiscal spending through giving out stimulus checks. There's some negative impacts of that in the long run of increasing the debt and making the value of money go down because when everybody gets free money, somebody has to pay for that. And you might think you're richer in the moment that you got the stimulus check, but later down the line, you may not have benefited that much from it if it means that everything else you're paying for is now more expensive. Like if you're paying twice as much for everyday consumer products that you remember, oh, this used to be half the price, and now you're paying double for everyday essentials like cheese and bread and milk. And you're like, why did that occur? So some of that is due to the supply chain, and some of it is from a lot of the emergency measures that had to be taken during the pandemic. And both administrations have participated in trying to address the worldwide pandemic that made a lot of people suffer. And it wasn't because the government necessarily did something bad in and of itself. They were trying to be helpful, but it's somewhat of an unintended consequence. So it's not to say that anybody's at fault, really. I'm not trying to encourage people to blame whoever is in a presidential administration because that's not really the answer. What the answer, to my mind, is that you just got to make yourself more enterprising. Like you have to improve your skills and do professional development if you want to get a higher amount of income someday, either from your current job or a future job, and get more money so that you can afford how things have gone up in prices, whether it's food, shelter, whatever it is that you need to pay for. You have to look within you to try to find the way to make the money so that you can get by in life. And it's not going to help your situation if you blame any president or say like, "Oh, because of them, like I'm in a bad place in life." You're not going to go anywhere like that. So that's what I encourage folks to do is look within so that you have better economic outcomes in the long run.
Yeah, that's actually great. And also, now that you say that, I remember that Warren Buffett, just to circle back to one of the people that we're very inspired by, he has been talking about something like you just said there, Michelle, that what he is saying is that find something that you're passionate about doing and then be the best in that field, like continuously improve yourself to be the best within that field, and then you're going to do great. So it's a little bit along the lines of what you're saying. I also want to say that it really helps also to just know a little bit about how global economics and mechanisms works. And Ray Dalio at some point made a great little YouTube animated video about how the money machine works, which is actually interesting to watch. And he describes in terms that are very easy to understand how the economic machine actually works. So I highly encourage, if you haven't seen it already, go watch that video to understand about market mechanisms. And also in terms of if the stock market will be impacted by the American presidential election. Think about what Benjamin Graham said about the stock market. So he had an analogy about the stock market that he called Mr. Market. And the analogy is that Mr. Market is like a colleague or like a business partner that changes their mood all the time. So going from greed to fear. And when we look at the stock market like that and think about, okay, so it sways between fear and greed, if you focus on that and not focus on trying to predict the future and if the president is going to change anything, like be in the here and now and don't try to speculate what's going to happen in the future. Don't let yourself be influenced by any expectations or the sentiment that other people are doing. So do make sure you swim against the tide and don't do what everybody else is doing. So when there's a lot of greed in the market, don't invest. And when there's fear in the market, then it's time for you to be greedy and start investing. So don't get influenced by any expectations that's going to happen with the US election. Do you have anything that you want to say here towards the end, Michelle?
Well, the most important thing is to perform your civic duty and go ahead and vote. No matter what impact there might be to the stock market, just go vote. You have that privilege and right if you're an American citizen, and it's our civic duty to vote. So make sure you do that this election cycle.
And on that high point, on that very important high point, we're at the end of today's episode, but we'll be back on Tuesday.
Till next time.
If you enjoyed the show and found the content informational, we would be super grateful if you would leave us a review and follow us wherever you get your podcasts so you automatically get new episodes in your feed. We publish a new show every Tuesday.
The contents of the Investing Mastermind podcast are for educational, informational, and entertainment purposes only. None of this is investing advice, and if you need help in your personal situation, please consult with a professional.